Ladies and gentlemen, I'll start this video by giving you a quick rundown on the current situation Bitcoin faces, the local time frame support we are holding right now, and the crucial nature of that support zone. I'll give you an update on the nature of the current macro market environment. Of course, I'm someone who believes we're in a very risky position right now. I'm taking a stance of caution, and I advocate for that stance. I think the data very much supports that stance. I don't think we're in a confirmed macro bear market yet, but I think we are teetering on the edge of that. I also think, quite frankly, this is not an opinion, this is an objective fact. We are running out of time. We're very close to just being out of time in general when it comes to the date range trends within the cycle. And here's the second part of the video. There is a very important distinction people need to make between the cycle itself and the date range trends that have emerged from the cycle. They aren't the same thing. A lot of people act like they are the same thing. I oftentimes even just move past the nuance and say they are the same thing on this YouTube channel indirectly, so I don't have to explain it every single time. But I think it's very important we nail this down now, given how close we are to the end of the date range trend cycle, which is separate to the 4-year cycle. Lots of misunderstandings within such a major thing as the 4-year cycle. We need to clear it up. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers. Starting out with the Bitcoin analysis, you won't be surprised to hear me say this. I've said it multiple times now in prior videos. I think the Bitcoin is teetering on the edge of a bear market. I think that if we don't see a strong bounce from this position, we will be in a bear market. And I think that what we saw on October 6th was a valid 4-year cycle top. Now, whether or not we go upwards from here is kind of irrelevant. The fact of the matter is the date range trends of the 4-year cycle pointed to an October top. Many resistance zones stacked in that exact $126,000 region. I'm just bringing up one of 4 right now, but one of them was very simple, very easy to understand. I'll ignore the others for now because I've discussed them many times. But here's one of them. It's a line that goes right back to 2017. It cuts across the 2021 high. It cuts across 3 recent highs, 3 separate zones that we rejected from in this bull market, right here in July, right here in August, and right here. So not only did we see a rejection from a major macro resistance zone, again, just one of 4, we also saw that rejection occur within the date range trends of the regular 4-year cycle, those date range trends having marked the previous tops on all occasions. So that was a very convincing top, and that was very likely a regular macro top. Now, whether or not that actually was the top, I guess we'll see, because we haven't actually seen the valid macro breakdowns yet to validate it. Now, obviously, calling tops when it comes to the 4-year cycle, you can't really just call a top as it happens. You need to see macro breakdown validations, and hence, in hindsight, you can look back and say, oh, that actually was the top, because now we're in a downwards trend. So we don't know whether that was the actual price top, but we do know if it was the price top, that would have been perfectly normal as per the cycle. Now, what am I looking at specifically? Well, first and foremost, I'm cautious for that reason. I'm cautious because that very well could have been the top, but I don't think we've completely validated a bear market yet. And the reason I don't think we've completely validated a bear market yet is because, yeah, there have been some bad things that have happened on the charts. Yeah, I'm on the sidelines, quite frankly. We've broken bull market support band. We've broken local term higher lows. These things have occurred. We seem to be struggling with resistance right now in a shorter term time frame. But we look at things, textbook, stock standard things like the 2-week chart RSI, which, by the way, has marked every macro top in Bitcoin's price history. We look at the triangle formation on that 2-week chart RSI, and we see we are still clinging on to support zone, support that lines up with the price chart support. So it's clearly not quite over yet. Even on Ethereum, we have bull market support band support, as well as flipping a previous resistance zone for support. So we are really on the edge of a cliff and not quite falling off yet. Looking at the weekly chart Gaussian channel, which has been the most infallible indicator for marking the starts of macro bear markets and macro bull markets, whenever we drop through the center line of this indicator, we enter a bear market. Whenever we pump through the center line of this indicator, we enter a bull market. This has a 100% success ratio over the entirety of Bitcoin's history, except for the small exception of COVID, which was a black swan event. And even then, we went down significantly below it just in a very short period of time. Every time we have marked a test of the Gaussian channel, we have pumped upwards in this cycle so far, ever since we flipped it back here in May 2023. The Gaussian channel seems to be acting in strong correlation with the weekly chart support zone at 44 on the RSI. Again, retests of the support zone in the Gaussian channel happens alongside retests of this RSI level I've circled a few occasions. Again, neither of these levels are broken down. So no confirmed macro breakdown on moving averages or momentum indicators, just some weakness and just caution. Again, caution is the key word I'm using. I'm not using the word bearish. I'm using the word cautious because I understand we haven't seen the breakdown yet. However, that could very well have been the top. That makes a lot of sense as the top. It's within the date range trend, and quite frankly, it's within a very major resistance zone rejection that we tested 3 separate times and rejected from each time. So not fully bearish, but cautious. Now, here's where we get into the interesting part of the video. That was mostly just recapping opinions that I've already spouted a few times before, and now building upon these opinions to make some important distinctions and definitions about the cycle to help you understand the situation a lot better. The reason why the situation right now is so interesting is because, well, that could have been the top, and we could be in a regular bear market or the start of a regular bear market right now, in which case we'd simply just go down for a year as per normal, which is what the cycle generally does. Or we could be in a situation in which we swing upwards aggressively, break the resistance zones that cause this, and see huge momentum shifts to the upside on Bitcoin, okay? It's very unlikely, almost, I would say at this point, getting to, almost impossible territory. And nothing's impossible, but it's getting there. For us to see a pump upwards and a top in October or early November within the 4-year cycle, that's just a little bit higher than the last one, and then dropping down again. At this point, if we're going to go upwards and break all-time highs again, we're out of time on the cycle. If we go upwards and break all-time highs again, we see these massive momentum shifts to the upside, it's going to lead to an extended pump that would break the date range trends of the cycle. It would be entirely new territory. So in my view, it's really just the 2 choices: bear market here, regular bear market, regular top, or pump upwards and see something completely unique that breaks date range trends within the cycle. Now the reason, and this is where we get back to the introduction of the video, the reason I'm saying breaks date range trends within the cycle rather than breaks the cycle is because the cycle itself is not the same thing as the date range trends we are using for predictive utility or predictive purposes. Many analysts get stuck on the idea of cycles. Cycles are not predictive tools. Cycles are means of interpreting historical price action. It's the trends that form as a result of cycles existing that offer us predictive utility. Okay, so cycles isn't just 4-year cycle. There's daily cycles, weekly cycles, monthly cycles, freaking moon cycles. Okay, people use various kinds of cycles in analysis. The problem with all those other kinds of cycles is they aren't underpinned by usable, solid data, usable, solid date range or price trends. It's a trap to focus on them. Okay, it's really just nonsense to focus on them. It's a promise of predictive capacity from something that isn't inherently predictive, something that is interpretive. The 4-year cycle is unique in the sense that it gives us a clear-cut data point. It's like, okay, here's the halving, here's the top, here's the bottom. Work it out. And when we work it out, we notice there are 6 separate micro trends that I've got listed on the left-hand side of the screen, all of which are remarkably precise and all of which work in conjunction and fluidity together, in harmony together. And these micro trends say that the top should be in October, maybe early November. Now, if the top isn't in October or in November, if Bitcoin goes upwards and keeps running into 2026, the cycle itself doesn't break because the cycle is broader than just date range trends, but the trends within the cycle breaks. Okay, let's just stop on that point for a second. The cycle, okay, has nothing to do with date range trends. The cycle has everything to do with macroeconomic factors, which have brought about the date range trends in the first place. The date range trends, in a way, are probably heavily linked to market sentiment and what people are doing. People will recognize they exist, and so they continue to exist because the market moves based on the emotions of people, and the emotions of people is based on TA in a lot of cases. So we could see a situation in which we break the date range trends of the cycle, run into 2026, but the cycle still holds in some capacity, and then new trends form. But My whole point has always been this. If the day range trends go, this just becomes another cycle. And I don't think cycles are useful. I think cycles are only useful when they give birth to the trends which offer us predictive utility. Because again, cycles as a whole, on a inherent level, are means of interpreting price action. And out of those interpretations, you can get predictive formulas, right? The predictive formulas are not inherent to the means of interpretation. So the cycle itself is kind of useless. And if the date range trends go, we can just almost stop looking at it, or at least stop looking at it so much as we are right now. The trends are what I care about, not the cycle. I care about the trends that the cycle has given birth to. So important distinction. I know it's not necessarily the most compelling topic or whatever. I think it is personally. I think it's very, very compelling. I think it's very nuanced, very sophisticated, important to look at. Most people probably just want to hear me, talk about a triangle, really basic stuff, but that's why most people lose in the market. You need to understand how these things work properly, and this is an explanation of it. Thank you for watching, guys. I really hope you enjoyed the video. CPI, not FOMC, coming tomorrow, so we could see some interesting short-term price action. I'll keep you updated. Subscribe to see that next video. It could be very important. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.